और मेरी आंखों में से आंसू आ जाते हैं।
Sometime a year ago, India saw its biggest IPO by company which has one of the most complex business models. The frame of biggest IPO back then was credited to Paytm.
Paytm पर 50 रुपए प्राप्त हुए.
It was later taken care by Life Insurance Corporation, which is LIC. The hype was real when Paytm came out with its IPO. Despite multiple reports of stats and true value of Paytm, which pointed out how the IPO will become a huge point of loss for retail investors, they got carried away. The 183 billion, nearly 18,300 crores of IPO received bids for over 91.4 million shares against the total issue of 48.4 million of shares. The retail category was subscribed over 1.66 times. For investors still holding Paytm shares since its listing, for a 1 trillion market capitalization, Paytm has turned out to be a disappointment, and a big one for that. Now 1 year has passed since its listing and the stock continues to reel under pressure. Paytm is down 70% from its peak and 65% down since its listing. There have been several recent developments which have again caused a sudden fall in Paytm shares. Now let's find out the reasons for why Paytm shares are falling. First is massive block deal. Paytm shares were expected to be under pressure after reported that SoftBank Group Corporation will sell shares worth up to 17.5 billion via a block deal. As of September 2022, SoftBank had a 17.5% stake in it. The stock is being sold in range of 460 to 470 per share as of now. This is just one of the block deals which Paytm has seen in the past couple of months. Earlier, SoftBank booked nearly 50 billion losses by selling Paytm shares. The block deal comes after a day after the lock-in period for Paytm investors ended, which brings us to the next reason, which is lock-in period expiry. Now, pre-IPO investors lock-in period for Paytm expired earlier last week around 15th of November 2022. When shares are freed up in open market, the stock usually sees a sharp fall in Paytm. In Paytm's case, it was around 86% of its outstanding shares were in lock-in period. Now, there was always a risk of insiders and pre-IPO funds selling on expiry of lock-in. This was one of the key reasons for insane fall in Paytm. Now, the mandatory lock-in period of 1 year is applicable for companies with zero promoter holding. During this period, shareholders allotted stocks pre-IPO cannot sell the shares in the open market. The category includes promoters, employers, and institutional shareholders, basically the insiders and smart money minds. Now, also other reasons behind Paytm's free fall is there have been other concerns which Paytm has been looking out, which is the disappointing results, valuation concerns, and among other reasons to name a few of them. Now, looking at Paytm's performance since its listing, Paytm has 52-week high of 1961 rupees touched on 18th of November 2021 and a 52-week low of 438 rupees touched on 24th November 2022. Since listing, Paytm shares are down 70%.